All right, everybody. Welcome to today's session, today's training webinar. We're going over a subject that we get a lot of questions about today. We're going to go over everything that you need to know when setting up your actual business, the legality of it, the LLCs, the business structure, how that affects taxation. We're going to talk about all of that today, specifically for U.S.-based sellers with preferably an online business. This is going to be, going over kind of the pros and the cons of different business models, or I'm sorry, different business structures, and talking about the liability differences, the taxation differences, and really figuring out which one is right for you in your situation. And this is something, you set it up once and you are good to go and go build the actual business, right? But I know this is something that holds a lot of people back when we're first getting started because this is an overwhelming thing. A lot of different language and lingo here that you're going to learn today. And we brought in one of the best guys in the industry to teach this to you today. We got Reed Larson, who's a co-founder of FBA Prep and the man who runs the show over there. So he's going to go over, FBA Prep does LLC creation for new business owners, specifically Amazon online sellers, e-commerce sellers. So Reed has really seen it all through his own businesses that he's built over his career, as well as all of the businesses that he helps set up within FBA Prep. So he's really seen every flavor of these different business structures. He's seen them play out. He knows the pros, the cons, and he will be the man to help you figure out which one is the optimal business structure for you. So without any further ado, I'm going to introduce Reed Larson and let him take it away. Steve and I are going to be in the question box for pretty much the entirety of today. I'll be jumping in and out as Reed wants me to. And guys, keep the questions coming. We're going to mark them, most of them, for the end, so Reed can answer them. But we're going to answer, whatever we can as we go as well. So don't keep us lonely in the question box. But without any further ado, I'm going to introduce Reed Larson, the co-founder of FBA Prep and the man who runs the show over there. How you doing, Reed?
Hey, good, Will. How are you doing?
Pretty good, pretty good. I'm excited to see this session. I know a lot of people here are too. So I'm just gonna give it over to you, my friend.
All right. Thank you so much, Will, and it's a pleasure being here, and I'm so excited to cover this stuff with you. It all kind of came into focus for me some years ago. I was sitting in a restaurant, and I was sitting there with a guy that he and I had just finished filing for a patent, of all things. And by the way, eventually the patent was awarded, which was kind of cool. But the reason why I bring the story up is I was sitting at this restaurant eating lunch with this business partner, and we were talking about business structures. We were talking about the pros and cons of an LLC, an S-Corp, a C-Corp, a joint venture, partnership, sole proprietorship, all the different ways that they fit together, and which would be the best way to protect my patent, right? Which would be the best way to protect the business that the patent would feed into or be a part of. And as we were sitting there having this discussion, we were about half an hour into it and pretty much finished, and I had been explaining to him all the different things that I had learned over my years of being in business and of managing and running these kinds of different structures. And I realized all of a sudden that every table around me was listening. Have you ever been in that position? You've been usually it's because you're saying something embarrassing, right? You're doing something like everybody's listening because they want to see how bad it's going to get. In this case, everybody was listening because nobody talks about this stuff. You can't go learn it very easily. It takes some experience and some overview to be able to really understand how these things work together. And as I was sitting there talking, and I realized these other people were listening, I didn't quite know what to do. I was like, well, should I keep going? So I did, and then afterwards, the guy sitting at the table next to me came over, shook my hand, gave me a business card, and said, we need to talk, which was kind of interesting because, everybody who is in business needs to know this. Everybody needs to talk about this, and we don't really do much of it. So I'm going to just kind of move forward through some interesting things. I'm going to show you some stuff today that I've never shown anybody before, even if you've been on a similar webinar, even if you've been on a webinar with me, or if you've been in any of our coaching classes, or if you've done any business with us in the past. I'm going to show you some stuff I've never shown anybody before. So, and I will point those out as we go along. And you know, one of the main things that I want to do here is tell you up front what I'm not going to tell you. Okay, I'm not going to tell you what to do. I'm going to give you the information that you need so that you can make the best decision for you. And I'm going to show you where the pitfalls are. I'm going to show you where the things are that you really need to know and watch out for in these various business structures so that you can create the best one for you. At the end of it, I'm going to show you a really cool organizational setup that's easy, it's fast, it's not hard to run, it's not expensive, and it provides ultimate protection and all kinds of goodies from tax benefits and everything else. So hang on for that. Towards the end, I will be showing you that, and it's actually the same structure that I use for my own stuff. All the businesses that I'm involved in fit into this structure. So what I'm not going to tell you, I'm going to show you, okay? So the first thing that we need to cover here is that if you or your company or any other entity actually conducts business in the United States, you've got to do this. You've got to figure out what's going to be the best overall type of business that you want to run. Is it going to be an LLC? I mean, we hear a lot about LLCs, right? Oh, you know, maybe I should go get an LLC. Is that really the best structure? There are some pretty big limitations to LLCs. There's some pretty big advantages to LLCs over other structures, and there are some reasons why you might want to choose one or the other. But the most important stuff we're going to focus on today is how to minimize income taxes, how to maximize liability protection, and how to facilitate the transfer of the assets, okay? What if you sell the company? What if there's a death? Maybe you or a key individual in the company passes away, and the shares need to be transferred to their heirs. You know, all those kinds of things we need to factor in, because really, if you don't minimize income taxes, you will eventually go out of business, right? If you don't maximize liability protection, then you know, somebody could sue you and you're out of business. And if you don't set up the business from the beginning so that it can be sold, then when the time comes for you to get your golden parachute out and ride off into the sunset, you're not going to be able to. Okay? Or if you have an unfortunate situation where a key individual passes away, whether it's business related or not, you're going to have heirs, and you're going to have other people coming into the picture trying to fight over their shares or whatever. You want to not have that happen, and you also don't want to find yourself one day in a partnership or in a business with somebody else, right? You don't want to end up having a business partner that you didn't choose to go into business with, but rather somebody that inherited or purchased the shares of the other person that you did want to be in business with. So those are all things that we want to consider, okay? Here's the thing. When I sell online, what do I need? Do I need an LLC? Do I need a corporation? How do I avoid double taxation? What kind of tax return do I need to file? And how much can I sell? How much business can I do before I need to file a tax return? Now, these are all important to people in the United States as well as people overseas or outside the United States, such as in Canada and Mexico and so forth. And we have clients all over the world that have come to us to consult about their businesses. And by the way, our consultations about the proper business structure are free. Just so you know, we're not here to sell you information. We're not here to charge you to have a discussion about your situation. At the end of this, I'm going to give you an email address where you can go and set up a consultation with me so that we can talk for a few minutes about what you're trying to do and what your end goals are, and then maybe what the best business structure would be for you. And so we're happy to help out. We want to help out any way that we can. All right. So when I sell online, I need these questions answered, and that goes for if you're selling on Amazon, if you're selling, if you build a Shopify store, if you're selling on eBay, if you're running any type of online business, and frankly, for any kind of business. It doesn't even have to be an online business. So what I want to know, first of all, if you could maybe just go into the questions section and just answer this really quickly for me. How many of you are already in business for yourself, or you know, running an online store or doing some kind of business that you own? How many of you are doing that? If you are, then just put a yes in there, or one, or something like that. One, me, yes, yes. Amazon, yeah, yep, yes, 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 yes. Wow, okay, awesome. We have hundreds of, oh wow, holy cow. There are a lot of people on this webinar, Will. The answers are rolling in. Yeah, you guys are great. So I'm going to do my very best, guys, to walk you through this and get you the information that you need. So it sounds like, and looks to me like many of you, eBay, some of you just started. Thanks, Rita, for letting us know that. Somebody has 3 businesses, Gerald. Yep, that's great. Alexander's wanting to know when it's going to be available. when is the webinar recording going to be available? We haven't even done it yet, and you already want it. That's awesome. Okay, so I know that the last time we did one of these, Will, correct me if I'm wrong, but didn't we do one primarily for international people who are living outside the United States that wanted to sell inside the United States, so we could talk about their corporate structures?
Yeah.
Do you still have
Yeah,
that
that's
one?
correct.
And you still have that recording that you can replay in the future, right?
Yep, definitely. Yeah, we have that recording, and that's actually we got so many questions from U.S.-based sellers after that session that we said we absolutely have to have you back.
So if you are a foreign-based seller, in other words, if you are not a U.S. citizen, there will be some differences between what we presented in that webinar and what I'm talking about today. Today is mostly for domestic people, although don't go away if you're not in the United States. The things that we talk about here are extremely important and will apply to you. They will just apply differently in some specific cases if you're outside the U.S. And the other webinar, you can go back and watch later, will highlight those differences. But today I'm going to speak and work and focus as though we are talking with people domestically who are selling domestically, okay? And along the way, I'll try and point out where the differences might be for you international sellers. So everybody, whether you're inside the U.S. or out, everybody should gain some really great information from this. All right, moving forward, I want to talk about the reasons to formally organize your business. A lot of people know instinctively that, wow, if I'm in business, I have liability. People can sue me. If I have a product that hurts somebody or kills somebody, or somebody doesn't like it, or whatever reason, they can sue you. And so you need to have liability protection. And the fact is that ownership is liability. Control is what you want. You want control of things. But if you own something, then you're liable for it. I mean, if you own a dog and it bites somebody, you're liable. Okay? But you would much rather not own the dog. You'd much rather control the dog, wouldn't you? Go over there, stop barking, leave me alone, right? Or come over here, sit in my lap, and let me pet you, right? You'd rather control the dog than own the dog from a liability standpoint, okay? Organization and separation. A lot of people don't realize this, but if you have bank accounts and so forth that are personal, credit cards, debit cards, and so forth that are personal, and you're using those for your business, you're commingling funds, and all of a sudden it becomes very difficult to keep track of which items belong to the business and which items are yours. They're harder to separate, and in the future, if you ever want to go obtain a loan or borrow money, or if you want to sell the business or things like that, it becomes very hard to unentangle yourself from the business, to separate the two. You might as well, and you should, start by separating the two from the get-go, right? Have a separate bank account, an EIN, which is an employer identification number. It's a tax ID number for the business, instead of your social security number, right? Don't put it in your social security number. Separate it out. Get an EIN for the business. That way the business has its own financial statements, its own credit facility, its own tax reporting. Everything is compartmentalized with that particular business, okay? And then there are also, of course, financial benefits, obviously taxes, but there are some great financial benefits to formally organizing your business. There are expenses you can write off as a business that you cannot write off as an individual, okay? There are perks, and there are lifestyle benefits also to the corporate lifestyle, right? I'll give you one example. If you have an S corporation or a regular corporation, you have to have an annual meeting, the annual meeting of shareholders and the board of directors. Well, guess what? You can have that meeting in Barbados or the Mexican Riviera. You can have that meeting in the Cayman Islands. You can have that meeting wherever you want. And for that meeting, once a year, all the travel, all of the costs, all the food, all the entertainment, all of your souvenirs, everything is deductible. So it comes off without taxes, right? And so, you can take a vacation. and have the business pay for it. You cannot do that as an individual, okay? Now, just so that you know, I am not a CPA. I'm not a lawyer. I'm not going to give you tax advice, and I'm not going to give you legal advice. I am going to speak from my own experience, which is more than 25 years of owning and managing businesses of all sizes and shapes. Every kind of business structure that I'm talking about today, I have owned or currently own and have managed and run successfully over the years. And so I'm speaking to you from my own personal experience, and I'm going to tell you up front that you should not make any decisions based on the information I'm providing here, because it's my opinion and it's my experience. But you should seek out competent legal advice and competent tax advice once you've made some decisions about what you are interested in for your business. But before you finalize it, formalize it, or file paperwork and things, you really should get some advice. Now, one of the nice things is that we here at FBA Prep, we have an attorney on staff who can answer those questions for you. You can give you competent legal advice and can help you set up whatever structure you want. In addition to having consultation for free, can provide you what you need. And so we're going to talk more about how that can work for you as well. But just be aware that pretty much everything I say from here forward on this presentation, in fact the entire presentation, is just my own personal experience, my own personal opinion. I am going to point out some interesting things on tax forms for you too. Even though I'm not a CPA, I can read, and because I can read, I can tell you what it says, right? All right, let's move forward here. Do I need an LLC or a corporation? Let's get into the nuts and bolts here for a minute. The kind of business structures that you see on the screen here: sole proprietorship, partnership, corporation, joint venture, and limited liability company. Those are the things that most people have heard of before and most people know a little bit about, just enough to be dangerous, right? I want to add a little bit of background here, just so that you know. You see the words disregarded entity on the screen. From a tax standpoint, the IRS does not consider a sole proprietorship to be a business structure at all. It's just an extension of you. Okay, so they disregard it. They don't look at it as a separate entity. They just look at it as like I said, an extension of you, a part of you. You're personally responsible for everything. And so there's some special rules that apply to sole proprietorships, and we're going to show you those in a minute. Obviously, partnerships, corporations, there's two kinds of corporations. We're going to talk about a C corporation, which is a capital corp, or in other words, a major or large corporation. And then there's an S corporation, which is a small corporation, and that is designed for not more than 50 shareholders and has some other restrictions to it, but it's perfect for families and small businesses, the kinds of things that you and I are most likely to be involved in. All right. Also, joint ventures and limited liability companies. So those are the kinds of things that we're going to talk about in terms of pros and cons, okay? Now, most of you are in business already in one form or another, and I hope that most of you have thought about these things and have started off correctly. But I'll tell you up front, even if you haven't, well, it's not too late. You're automatically assigned one of these. Okay? If you don't do any business planning whatsoever, if you do nothing, then you are automatically assigned the sole proprietorship business style by the IRS, and that's how you report your income, your expenses, and your taxes. And so we're going to talk about the ramification of that here in just a minute. Okay, so why don't we start off with the sole proprietorship. The sole proprietorship is basically self-employment. Okay, you're in business, you're out there, it's a DBA, maybe you're doing business as, Joe's online business or whatever, but you don't have a corporate structure. You've not filed a corporation, you've not filed a partnership or limited liability company, anything. Nothing's been filed. You're just doing business as under a fictitious name or whatever. Okay, if that's the case, you should know that you have no liability protection. You have maximum exposure, because anybody that wants to sue the business is suing you personally. That means your house, your cars, your assets, your bank account, everything you own. is on the line and can be taken if you lose in a lawsuit. That's not a happy place to be. So just so you know, if you choose not to set up any type of corporate structure, that's what you're signing up for. I know many of you probably are in that boat and don't realize that, you know, what a precarious position that really could be in. But you know that the United States is a very litigious society. People sue, you know, people and companies for any old reason they can think of. There's been some absolutely ridiculous lawsuits, you know, that you hear about all the time, right? Don't put yourself in there and become a victim of that. This is, you know, the first thing to fixing that problem is to know about the problem. And so I'm just, unfortunately, the bearer of bad news to many of you, but this is where you are. And I learned long ago that the best way to face a big problem is to figure out what the size and scope of the problem is first, and then start to systematically go after and solve the problem. And so this is what we're doing for you who are sole proprietors, okay? You are personally responsible for all the company debts. That means, unfortunately, that if the business borrows money and the business fails, that you personally have to pay back the bank or wherever you borrowed the money from, even though the business failed. Okay, you're on the hook personally. You get the highest tax brackets. You have to pay self-employment tax, SE tax, and you have the minimal latitude. Okay, for writing off expenses, you get the least amount of expenses you can write off, which means that you pay the most in tax. And unfortunately, this is what most people do when they first start out. Now, here's one of those things I've never shown people before. I'm going to just go ahead and show you. This is a Schedule C, profit or loss from business. This is part of the personal tax return. Okay? If you are self-employed or doing a DBA and you didn't file any type of structure, then this is where your income and expenses go. All right? You can see part 1 right there on this page. You may have to blow up your screen a little bit to see it. But part 1 says income and part 2 says expenses. Very simple. You put your income above the line and expenses below the line, and you can write off some things like advertising and car and truck and commissions and contract labor. You get some depletion, some depreciation, and some employee benefits and insurance. That's pretty much it. That's all you can write off. Oh, legal and professional services too, and office expenses and things. Yeah, you can see those things are all there. But you know, the travel and meals and entertainments have special rules. There's deductible meals and entertainment, which means that you can't write off some of the meals, some of the entertainment, and so forth. So it kind of starts to minimize what you're allowed to do. But the bottom line is that there on line 21, it says net profit or loss. And the reason I put that box in red right there is so that you would see that at the bottom of this profit or loss schedule, after you filled in all the numbers, here's all the income, here's all the expenses, that net profit down there, if you read that, it says to put that number onto Schedule SE. That's the self-employment schedule, line 2. Now, I blew that up so you could see it. Hopefully you guys can all see that on the screen. Will, is that something people can see?
Yeah, I think they can see it. Let us know in the question box if you can't, but I can see it, so I think they can too.
All right, very good. So if you see this right here where I'm blowing this up, Schedule SE means whatever net profit you make in your sole proprietorship, you have to enter that number on Schedule SE. That's a different place in the tax return. So after you're done with this schedule, in other words, after you're done figuring out what your profit is, then you go to the self-employment tax schedule, and right here you enter that information, and then right there on line 5, I put a red box on there, you're going to multiply your profit by 15.3%. In other words, if you made $100,000, then $15,300 gets filled in there, and guess where that goes? Here's your 1040. This is your individual tax return. Remember, it's a sole proprietorship. There's no corporation, there's no partnership, there's no other tax return. It just goes on your personal taxes. And you can see that in the income section, which I've circled in blue, I've highlighted in red a box that says business income or loss, Schedule C. So that's where you put the $100,000 of income if you netted $100,000 in your business, okay? And then on the back, you see this line. It's the insidious line that nobody wants to do. It's line 57. Self-employment tax. And that's where you put the $15,300. See the red box right there? That is where, right there, self-employment tax goes. And it's an additional 15.3%. So when I say that a sole proprietorship, you get taxed more, I mean you get taxed 15.3% more, right? Don't do that. Okay? It's terrible. It's horrible. You know, why would you want to get taxed twice? Because look at the blue box up there. See the blue box? That's your tax already. So you have taxable profits plus, in addition to the taxable profits, you get self-employment tax on top of it. So a sole proprietorship gets double taxed. All right? That's the problem. You don't want to do that. You don't want to be there. You want to choose a business structure that will help you to get out of that self-employment tax. Okay. All right, we've covered that, so I want to move on. I want to hit limited partnerships. Limited partnership means that there are two or more people that come together and they want to run a business together. Okay? It's not a self-employment thing. It's not an individual. Now we have two people. And usually one of them is a general partner, and sometimes other people may be involved in it. There may be several people who are not general partners. There may be several limited partners. But at the end of the day, there's one general partner typically who runs it. Okay, that general partner has the say in how things go. The limited partners do not have say in the management, but they also have limited liability. So if somebody sues the partnership, the limited partners are not responsible for the losses. The limited partners are not responsible for the debts of the company and so forth. Okay? The limited partnership files a 1065 partnership return. Okay? It's a special tax return. It doesn't, you'll notice it's not a 1040 like your personal tax return. This is a 1065 partnership return. Now that return has some special benefits to it that I'm going to show you here in a minute. It has pass-through profits and loss. There is no double taxation. And there's not much organizationally required. It's very easy to maintain. You don't have to have meetings. You're not required to have certain meetings every year. You're not required to keep certain paperwork and bookkeeping and all that other stuff. You can pretty much do it as loosely as you want. Okay? So a limited partnership is an example of a business structure that has some great tax advantages. Now I'm going to show you right here. This is the 1065 tax return. See all those red arrows? The red arrows are all of the places where you can put deductions. All right? So let's say that you had $200,000 in sales, and well, then you've got returns, you've got cost of the goods that you sold, you've got salaries and wages, you got payments to partners, you've got repairs and maintenance, bad debts, rents, taxes and licenses, interest, depreciation, depletion, retirement plans, employee benefit programs, and then there's this wonderful one here at the bottom called other deductions. And the other deductions are great because there's a whole other list of all the stuff that you can write off as a partnership. Okay? So the only difference between a sole proprietorship and a partnership is you got two people running the business instead of one, and those two people have filed something with a state, and they file a tax return here, a 1065 tax return, instead of putting those things onto their own personal tax returns on Schedule C. That's the only difference. It's the same business. You can run it the same way. But now you have liability protection, and now you also have minimized taxes because you're maximizing your deductions and you're not paying self-employment tax in most cases, okay? So that's what I wanted to show you right there. On the individual income tax return, you see the red box? That's where Schedule C, in other words, self-employment income goes. But you see the orange box? I'm going to show you what the orange box shows, and that's partnerships and S corporations. So right there in that orange box is where, I don't know if you can see that, I'm blowing that up for you, that's where income gets put on your personal tax return. It's not Schedule C, it's Schedule E, like Edward, okay? Schedule E is good, that's why it's in orange. Schedule C is bad, that's why it's in red. Any business that you run that has to be put onto a Schedule C because you failed to set up a business structure, you're going to get creamed with self-employment tax. Any business that you run because you set up a partnership, an S-Corp, an LLC, or some other structure is going to go on Schedule E, and there's no self-employment tax. That's the only difference, just where you put it on the tax return, okay? And so we're going to move on from partnerships now, and I want to talk to you about corporations. And by the way, I will pause for questions in just a minute. I know many of you probably have questions, and that's great. We want to answer those as much as we possibly can in the background. All right. Corporations come in two kinds. Okay, there's C Corp, there's S Corp. C Corps basically are bigger corporations. They have more than 50 shareholders. They might be, wanting to be registered on a stock exchange. Maybe you have, a large business, right? That's fine. That's what it's for. Those kinds of things are all, larger stuff should be probably handled by a C corporation or some other business structure that we're going to talk about. But S corporations being small, they have certain rules, and we're going to talk about those rules here in just a minute. The basic structure here, the basic understanding is, if you're starting out selling online, if you're just getting started, or if something, you're not sure if it's going to blow up into a big business, you can always start out as an S Corp. If you are a U.S. citizen, okay, all the shareholders of an S Corp must be U.S. citizens. If you're in business with, or you're partnered with somebody who is not a U.S. citizen, then S Corp's not available to you. You can still do partnership and C Corp and things like that, and we'll talk more about that in a minute. So basically, I want to show you the difference between a C Corp and an S Corp on tax forms, and then we're going to talk about, first we're going to talk about the differences kind of in general. So a corporation declares a profit and pays taxes on it. Okay? You can think about it like a corpse. The word corporation comes from the same word as corpse. In other words, a corpse, C-O-R-P, to incorporate means to create a body, means to create something out of nothing, right? You create this business that stands on its own, almost like a robot, okay? You can go control the robot. You can tell it to sign documents. You can tell it to open a bank account. You can tell it to conduct business. But if something goes wrong, then you can always cut the robot loose, and it doesn't affect you. Okay, you just control it. You aren't it. And so the robot, in a case of a C corporation, declares a profit and pays taxes. Okay, if it's $50,000 of profit or per year or less, it's 15%. That's federal income tax. Plus, if there's state income tax, then you'll pay that too, or the corporation will. The nice thing is you can control what state you organize in, and so of course you're probably going to want to organize in a state like Wyoming, where there is no state business tax and no state personal income tax. Profit in a corporation is calculated very simply. It's gross income minus expenses, and then you've got your net profit, right? And you're going to file an 1120 corporate return and pay taxes on that. The problem with a C corporation is that as you look at this, you realize that the corporation pays taxes, and then if you get a dividend, like let's say the corporation makes $50,000 and wants to distribute that profit to the shareholders, and let's say that there are 2 shareholders and you're one of them, then you're just going to distribute $25,000 to you. That's called a dividend, and you will then pay personal tax on the dividend. Now, the way that looks is, if you had a $50,000 profit, let's say, and you paid $7,500 in federal tax, now you've only got $42,500 left. Okay, so you're going to take that $42,500, you're going to get half of it in your dividend, that's $21,250, and then you're going to go ahead and pay, your 28% or 30% tax on that, so that leaves you with $14,875. So instead of $25,000 that you get cash in your pocket, you only get about $15,000. And that's because it gets taxed twice in between the company and you. So that's one of the things that we want to get around, and the good news is S corporations are not double taxed, and so that's why they're preferable for smaller business, particularly online businesses like the things that we're talking about now. Now, C corporation does have to have an annual board meeting, and there are some bookkeeping requirements. You have shareholders, a board of directors, you have officers, and it provides very strong liability protection because, frankly, as a shareholder, you're not liable for what the corporation does. I mean, if you held shares of Apple and Apple goes and creates a product that hurts somebody, or even worse, let's say you had shares of Samsung and then Samsung had a phone that caught on fire and caused a lot of damage, or maybe, you know, killed somebody. All right. Are you, as the shareholder, responsible for that? No, you're not. The person who got injured cannot sue the company and then sue all the individual shareholders of that company, because the shareholders really didn't make any business decisions that resulted in the damage. So that's the strong liability protection that a C corporation enables. Okay. All right, we're done with C corps. Now I'm going to go to an S corp. And by the way, the Samsung example, yeah, that happened, right? I hope none of you had that phone. I was in the airport the other day, and you know, they have signs everywhere that say, you know, you can't bring the phone. There's several things you cannot bring into an airport, right? You can't bring guns, knives, hoverboards, and Samsung phone. They think it's some sort of ticking bomb that's going to blow up. All right, so the nice thing here about a U.S. corporation on the 1120, I'm just going to show you this here. You see there's an income section at the top, and then there's a deduction section, and then you see it says taxable income. That means that this income that goes on the 1120 form for a corporation is taxable. That's where the taxable income goes. All right, let's look at S corporation. The nice thing about an S corporation is it does not declare a profit or pay taxes. All right, the profit comes only as a profit and loss statement is generated. So you generate a statement and you see what the bottom line number is, and that becomes the profit. You don't sit there and declare, oh, okay, we're going to make this much profit and you know, defer other things. I mean, there's a whole lot of other accounting gimmicks that you can do in a C corporation and things, but S corporation, much more simple. It doesn't declare a profit, and it also doesn't pay taxes. Okay, it files an 1120 corporate return, but it's not the same kind of 1120 corporate return that you see on your screen. This one is the C corporation, and it has taxable income. I'm going to show you the S corporation here, and you can see that it says ordinary business income, but it does not say taxable. All right? At the corporate level, you don't pay tax. That's good, right? Not paying tax at the corporate level. So, in other words, look at the income section and look at the deductions. Those deductions and the income areas where you get returns and allowances and cost of goods sold and all the deductions for all those things. It's all the same stuff pretty much as the partnership was, because an S corporation really combines all of the liability protection of a corporation with the tax advantages of a partnership. So you can combine the best of both worlds into an S-Corp. It gets the flow-through taxation, it doesn't get double taxed, and it gets to take advantage of really a lot of deductions and so forth, so that you minimize the amount that you declare as income, or that you don't actually declare. You minimize the amount of ordinary business income in the blue box there, and then that enables you, of course, to pay the least amount of tax. Okay? A few other benefits that you can see on the screen. You get to pass through 100% of the profits. Your profit is calculated as gross income minus all those expenses, just like the corporation, the C corporation was. You do need to have an annual board meeting, and you do have shareholders, but not more than 50. And the taxation of those shareholders is based on percentage ownership. So if you and one other person own an S-Corp, then each of you gets taxed based on your percentage ownership. If you own 75% of it, then you pay tax on 75% of the profit. The one thing that you ought to notice is that an S corporation can have a minimum of one shareholder, one owner. So if you are in business for yourself as a sole proprietor, you could, in essence, set up a corporation, call it an S-Corp by filling out one form, and therefore get all the pass-through taxation, eliminate the SE tax, get all the income onto Schedule E where you want it, and take advantage of all of the tax write-offs and the deductions and the mandatory meeting that you can, shareholders meeting and directors meeting that you can hold in some exotic location somewhere, and all the perks and all the lifestyle benefits and the liability protection. You can get all of that very easily if you just understand how to do this, okay? So you get the same strong liability protection, you get the tax deductions, you get all those benefits in an S corporation, and you get all of the tax advantages of the partnership that I illustrated before. All right, so on your personal income tax return now, instead of the income going into the red box, if you have an S-Corp set up, the income goes into the orange box. Your share of it, whether it's 100% or 1% or whatever your share is, it goes there. And on the back of your tax return, where you can see there, on line 44, you put in the amount of tax that's due, but there's no additional tax. There's no self-employment tax. There's no other taxes that come as a result of that. So that's how you minimize the amount of tax that goes on your personal tax return. And I'm going to illustrate that for you again here in a minute. I want to move forward now that we've covered a partnership, we've covered a C corporation, we've covered an S corporation. I want to go on to joint venture. But before I do, let's take some questions. Do you guys have any questions about partnerships or about S or C corporations? If you do, go ahead and put the question into the box right there, and we'll try and get that answered right now in the flow of the webinar. And if none of you have questions, and I'm doing just such an awesome job of explaining it all to you so that you have it, that's great. If your head is swimming, you're going, oh crap, there's all this stuff I have to know, don't worry. You can go back and watch the recording. It's simple and easy. Once you have been through it once, and you go back and watch it again, you're going to be able to understand this stuff a lot better. Somebody says, can you start an S-Corp while on a green card? Been in the States for about 10 years. Okay, I don't know the answer to that off the top of my head, but if you have a green card, I assume you have a social security number, and if you do, I think you can. I think you just have to have a social security number to make that work, although that would be a great question to ask our lawyer. Daniel, thanks for the comment. Head might be swimming, but it's a good kind of swim. Jason says, did you say you have to be U.S. citizen to register an S-Corp? Yes, I did. All shareholders, all owners of an S-Corp must be U.S. citizens or have a Social Security number at a minimum, okay? So if you don't have a Social Security number, then you're out. And if you're not a U.S. citizen, but you hold a green card, I got to find that out. I don't know the answer to that question off the top of my head. Somebody's asking, Anna, yes, if you have an LLC and bring on a partner, at what point should you switch? Okay, we have not covered LLCs yet. So Anna, hold that question. All right? Claire is saying, do you know what the UK versions of these are? Yes, and in the international seminar we covered that a little bit, but just in short, the partnership is going to be a limited partnership or a partnership in the UK. A corporation will be a limited company, which also can look like a limited liability company as well. We're going to cover LLCs. But frankly, the corporate law that the United States uses for corporations and partnerships originated in England in the 1600s. So ours is kind of based on yours if you're in the UK, and so they're going to be very similar. Yeah. All right. Let's see. We have a question from Jason. If I use personal credit cards, does that affect my liability? Well, obviously, you personally have to repay the debt on the credit cards. If the business fails, you're stuck with the credit card debt. So that's a yes. Carl says we can form in another tax-free state. Yes, you can form in any state. And I'm going to recommend Wyoming because there's no state income tax. There's no personal income tax. And it's a great place to run a business because it's very inexpensive. There's a very small number of people that live in the state of Wyoming, so the chances of you getting sued and all those kind of things go down. I mean, there's so many great things there. The most important thing about it, I'm going to cover when we get to limited liability companies, because Wyoming is the place for limited liability companies. The laws there are so good for LLCs. It's just great. Kelly's asking a great question. I want to cover this one. If I'm just starting out, does it make sense to start as a sole proprietorship until I start making a profit and then switch to an S-Corp? And the answer to that is no. It makes sense to start off as an S-Corp because it's not expensive to file an S-Corporation. And you immediately get the tax benefits. If you start out in a business, and what's your goal? Right? Are you going to do $1,000 a month? Are you going to do $5,000 a month? Are you going to do $1 million a month? What's your goal? Where are you going to be? And are you going to stay a small business for a week or 2 weeks or 2 months or 4 months? But I mean, by the time you've been in business for a year, I assume every one of you on this call wants to have some significant income. So do some significant business. If you're selling on Amazon, you want to do $10,000, $20,000, $50,000, $100,000 a month. By the time you've been at it for 6, 8, 10, 12 months, you want to be doing that. Well, yeah, so if that's what you're going to do, you should begin with the end in mind. You should begin with the right structure because it's not expensive to set it up, but it's very difficult to make the transition. And if, in the meantime, you have something go wrong, you're going to wish you had that S corporation or an LLC or something set up to protect you from the liability, from the taxes, and the other problems that can come up. So yes, I would highly recommend that even if you're starting out, you should strongly consider setting up some type of business structure. Okay? All right, let's take a look at joint ventures. Joint venture is a loose agreement, okay? It's not a corporate structure. A joint venture is between two people or two entities or one person and one entity or whatever, but it is not a corporate structure. All right? It's a loose agreement where you're going to work together. You're going to share the profits. You're going to share the losses, but you're also going to share all of the liability. And so what happens is you get no liability protection in a joint venture. If you and your buddy get together and say, let's start a business, and so he and you or she and you go ahead and buy some supplies and rent a warehouse or an office or something. Whose name is it going to be rented in? Yours or the other person's? Who's going to put up the money? You or the other person? Whose bank account are you going to use? Yours or the other person's? Right? It almost always results in commingled funds because you're using your personal assets. You're using your personal stuff to go into business, and you don't have a corporate structure. You're not loaning it to the business. It's just you. You're taking your own stuff and you're using it to conduct business. So it results in a sole proprietorship situation between you and the other person unless you have a corporate structure in place. So, for example, 2 LLCs can do a joint venture, 2 S-Corps can do a joint venture, but why would you? I'm going to show you how to do a joint venture much better here in just a minute. Not to mention, by the way, the accounting challenges. A joint venture does not have an employer identification number, doesn't have its own bank account, et cetera, et cetera. So how do you possibly keep all the books straight? This $50 that I spent, that was for the business, and your partner says, no, it wasn't. Then what do? All participants, okay, become liable and responsible for the activities of all the other participants. We call this blowback liability because if your partner does something wrong and gets sued or the government steps in and shuts you down or whatever, you as the joint venture partner can be held responsible. That means your personal assets are on the line for the activities of your partner, and that's definitely not where you want to be, okay? The bottom line is stay away from a joint venture. Instead, create a structure for the joint venture. All right. I'm going to move forward here from joint ventures into limited liability companies. This is the one that a lot of you have heard of. A lot of you may have 1 or 2 of these. And I want to talk with you about limited liability companies for a minute. Limited liability company, LLC, does not file articles of incorporation. It files articles of organization. It does not have bylaws like a corporation does, which are the rules under which the voting and the shares and things are managed. You know, what it has instead is an operating agreement, and that's just an agreement between the owners of the limited liability company, the managers, the members, how the business is going to be run. Okay, so there's two main components. There's the articles and there's the operating agreement. And it mirrors what a corporation does for articles of incorporation and bylaws. So the structure is very similar to a corporation, but it has all the tax advantages of either a partnership or an S-Corp. Okay, or even a regular corporation if you want. The thing about a limited liability company is the IRS does not consider it to be a particular type of business. It's a chameleon. The LLC can act like and therefore be taxed like a partnership, or it can act and be taxed like a corporation, or it can act and be taxed like a sole proprietorship. All right. So what you need to know about an LLC is early on, like when you set it up, you need to decide, are you going to run it as a sole proprietorship, like a disregarded entity, and therefore have all of the double taxation and other issues that a sole proprietorship has? The only thing different than that is that the limited liability company does protect the sole proprietor from liability, but it is no protection whatsoever from taxes, which are like kryptonite to a business. So the kryptonite shines right through the LLC and hits you personally, and that's it. In the case of a sole proprietorship style limited liability company. So you will probably want to choose to be classified by the IRS as a corporation, an S-Corp, or a partnership. You're going to select one of those. You get all the liability protection of a corporation. You get all the tax advantages of the partnership or the S-Corp. You don't have to have any meetings. You have managers that run it and members that own it. It's very simple. It's easy to maintain. The bookkeeping and the records are very simple. And the nice thing is different states have different laws. So that means that some states are outstanding in their protections and in the way that they run things. Wyoming being the top of the list. Wyoming is known for the maximum amount of liability protection. It's literally written into the statute that written into the law that the members, the owners of a limited liability company cannot be sued for the activities of the company. Okay. In Nevada, that's been known for privacy, although recently that's pretty much gone away. The IRS now gets full compliance from the state of Nevada, so the privacy thing is pretty much non-existent anymore there. Delaware has been good because the laws there are very positive regarding businesses. So if somebody wants to sue the business, it's very hard for them to get a judgment against the business. And New Mexico is the best for secrecy. But secrecy is different than privacy. Secrecy is where you want nobody to know who owns the business. But then again, you can't really have a bank account. You can't really conduct business anywhere because then you would have to reveal who the owners are. So there are certain cases where a New Mexico corporation or New Mexico LLC would be ideal because you want to keep something secret. But the minute you start running, doing business and needing an EIN and opening a bank account and things like that, then all of a sudden that secrecy goes out the window. So you've got some different laws to consider. Wyoming is a great combination of maximum liability protection, minimum cost to set up, minimum cost to maintain. For example, it costs about $664 to set up a Wyoming limited liability company, including your registered agent, which is the person who, it's an attorney who lives in Wyoming who is responsible for receiving service of a lawsuit if somebody does decide to sue you. It's required by law that the LLC or a corporation have a person that lives in that state, so that if the government needs to serve papers or anybody needs to serve papers on the company, that it can go to that person. So the cost of setting it up includes not just the filing fees and the filling out of the forms and all that, but also includes the registered agent for a year and includes all the setup cost and the filing fees for the state of Wyoming and everything. So the maintenance is usually about $200 a year. It's not expensive, not like many other states. Now, those are all features of a limited liability company. What I want you to focus in on here is the limited liability company is kind of like a jack of all trades. It's like a Swiss Army knife. It can be this, it can be that. You choose it once and go. Sometimes you can change back and forth depending on certain circumstances, but the bottom line is you can select the kind of taxation you prefer. You can select the type of liability that you prefer because you can set it up in different state and because you can select the type of IRS tax form that you're going to file. So if you're going to file an LLC as an S corporation, you would use this 1120S. You use the identical tax form to an S corporation, and you can see there's an ordinary business income or loss there. There's no taxable income, okay? Or you can file a partnership return, and again, it looks the same. Ordinary business income or loss. There's no taxable income, all right? So that's the nice thing about it. On your personal tax return, whether you go with an S-Corp style LLC or whether you go with a partnership style LLC, either way, it shows up on line 17, Schedule E of your tax return, not Schedule C, not Schedule self-employment tax, none of that stuff. It's very simple, pass through, only taxed one time, and that's at your personal tax level. Not taxed at the corporate level, not double taxed, and not self-employment taxed. Okay? So it works either way, whether you go with a partnership, which is multiple people, whether it's an S-Corp, which is one person or multiple people, but they all must have Social Security numbers. Either way, favorable taxation. Okay? Now, the big questions. Which structure should I use in my situation? What is the best structure for me? What are the advantages and disadvantages? All right. Well, from a tax perspective, an S-Corp or a partnership is the best. From an asset protection perspective, an LLC or an S-Corp or a limited partnership is the best. They're all good. But of them, a C corporation is the very best, followed very immediately thereafter by a Wyoming LLC. And if you do a Wyoming LLC taxed as an S-Corp or as a partnership, you kind of get the best of all worlds. Now, from an estate planning or succession planning perspective, here's what's really cool. If you do an LLC, you can, in the operating agreement, you can specify how your ownership transfers to somebody if you die, such as maybe it transfers to your wife, maybe it transfers to your children. This is estate planning or succession planning. Also, if you want to sell the business, you can just simply write up a contract, sign it, and sell the business, and somebody else can take over that LLC as the new member. This is really, really important if you're selling on Amazon. Okay? I'll give you an example. Amazon does not allow you to sell a Seller Central account. Let's say you have a Seller Central account like we do with 2.5 billion units of shelf space that's done millions of dollars worth of business and has extremely high ratings and tons of great things about that. Well, guess what? If it's not in an LLC, if it's in my own Social Security number, I can never sell that darn thing. Well, that would be bad. So that's why somebody asked, if I'm just starting out, is it better to start as an S-Corp? Yes, because initially when you set up, especially with something like Amazon, when you go to put in the tax ID number, if you put your Social Security number in there, you're screwed in the future if you want to sell that business. If you put the EIN, the tax identification number of an LLC in there or an S-Corp, whoever is the owner of the S-Corp owns a Seller Central account, and that ownership of the company can change hands, and that's how you can sell the business. That's how you can manage succession in the future. And another great reason not to do a sole proprietorship under any circumstances, please, 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 please do yourself a favor and don't do a sole proprietorship. Okay? Now, here's the ideal setup. I told you I'd give you some Easter eggs. Here's some stuff that I've never really talked with people about on a webinar. Here's the ideal setup for most people that are conducting online businesses. This is your Amazons, your eBays, your Shopifys, your arbitrage, all of those kinds of things. even your consulting businesses, okay? And even if, it doesn't matter whether you're selling physical products or digital products or consulting or services or things like that. This ideal setup will minimize taxes, minimize liability, give you clean financials and the ability to sell any line of business. And I'm going to show you a diagram of this. Before I do that, Luke says partnerships will also trigger self-employment tax. Okay, so Luke, let me tell you how that works. A partnership can trigger self-employment tax, but not for the limited partners. Generally speaking, if you fill out the tax form correctly, only the general partner will have self-employment tax. Now, I'm not a CPA, but I've seen this done before. On a limited liability company taxed as a partnership, if you put both or all of the owners, all the members, as limited partnerships and there is no as limited partners and there is no general partner, then there's no self-employment tax. There are some tax return preparation programs that are used by tax professionals that do this automatically, and there are some where you have to kind of do it a certain way in order to get that self-employment tax out of there. So what I'm telling you is, if you have the right tax person and that person understands the computer program that they're using, they're able to fill out that form correctly and minimize or eliminate the self-employment tax if you're filing as a partnership, okay? All right, I'm going to show you now the diagram. That's what it looks like. Pretty cool. So there's you standing on top of your pile of money. How did you get your pile of money? Well, you have an S-Corp, a super S-Corp, let's call it. It's the S-Corp that you own, all right? That S-Corp then, in turn, owns LLCs for each of the lines of business that you're involved in. Maybe you've got a family business. Maybe you've got a real estate business. Maybe you've got an online eBay store. Maybe you've got a consulting business. Maybe you have a little business in your garage where you manufacture something and sell at flea market. Whatever it is, you build an LLC around that. You give it its own bank account, its own debit card, its own tax ID number, and it becomes its own line of business, okay? Now, it's particularly, like I mentioned before, if you're running an Amazon business, you really, really, really need to do something like this. Now think about this. What if you decide to sell your Shopify store? Okay, you found a buyer, they're willing to pay you $1 million, and you are ready to ride off into the sunset. Very simple. All you got to do is sell the LLC. The bank account doesn't have to change. The EIN doesn't change. The logins and all of the proprietary information doesn't change. The customer list doesn't change. Nothing changes. Just who's the owner. So instead of your S corporation owning that LLC, somebody else owns it. Done. It's a simple form. It's a very simple buy-sell agreement that can be put together by our attorney or yours that everybody signs, and they pay you the money, and you're out. You can do that because you don't have any liability. You can do that because you're not commingled. You can do that because you set it up correctly from the beginning so that you'll have the capability to cut it off and sell it. It's kind of like an octopus. Cut off a tentacle and it will grow back another one, because you know what's going to happen as soon as you sell your Shopify store for $1 million, you're going to go start another one, or maybe you're going to start a bunch, and that S corporation can own them all. Now, a nice thing about an S corporation is that it can own part of a business too. So let's say that your family business has you and your spouse and your kids, and let's say you got 3 kids, so you got 5 owners of the family business. Well, your S corporation can own your shares in the business, and your kids can own their shares directly, or they can have their own S corp. What if you meet somebody in a restaurant who overhears you talking about business structures and decides they want to get to know you, and you guys hit it off and you decide to go into business together? I mean, it's been known to happen, right? So what if you decide to go into business together? All right, your S corp and that person's S corp hopefully will own a partnership, or an LLC taxed as a partnership. And that way you are able to get, watch this, 2 cracks at tax deductions. So up here at the top, you can see next to the LLCs is a Form 1065 partnership return. And you remember you had all those places where you can deduct, okay, all these expenses that you can deduct out of your gross profit. So you have your net sales or your net income, or your gross sales and gross income, and then you subtract all the costs, all the expenses, everything out, and you come down to a low number at the bottom line, and then that flows to your S-Corp, and your S-Corp starts with that low number as its top line, and you start to deduct the expenses of the S-Corp, the board meetings, the vacation, all the travel, the mileage for your car, the lease or the rent for the office in your home, all those kinds of things. The S-Corp gets to deduct, and so what's left over at the bottom of that is an even smaller number that goes onto then your personal 1040 on Schedule E and doesn't get hit with self-employment tax, and therefore you keep a lot more of your money, and that's why you're standing on a pile of money. All right? It's because you set it up correctly. Now, can the S-Corp own an indefinite number of LLCs? Yes. Can the S-Corp own other S-Corps? Yes. As a matter of fact, it usually can. Can the S-Corp own shares of a C-Corp? Yes. Can the S-Corp do business by itself? Do you need all those LLCs? No. But if you're ever going to sell your Amazon business or your Shopify store or your real estate business or your family business or any other business that S-Corp engages in, much easier to sell off that LLC and you keep your S-Corp. I've had my S-Corp since 1994. How long is that? God, we're in 2017 now. That's a long, long time. That S-Corp has owned lots of businesses along the way. But every kind of business structure, every kind of everything that S-Corp has owned along the way, all that income flows from those other businesses into the S-Corp, where I get another crack at all the deductions, and so I minimize the tax bite. And how many layers of protection are between me and the customer? In order to come and get anything from me personally, they would have to sue and prevail against an LLC, and then somehow manage to figure out a way to penetrate the corporate veil, in other words, the protection of liability, to get to the S-Corp. And then they would have to successfully sue the S-Corp and pierce that corporate veil to get through to me. And by the time anybody would ever be able to do something like that, well, I've had plenty of time to arrange my affairs so that there's really nothing left for them to get. So it deters people from suing you in the first place. And that is the best liability protection of all. Now, Olga is asking a very good question. I'm going to answer that. And please start putting your questions into the box. Would love to answer those questions. Olga's question is, do I have to file each one separately? Each LLC separately, each S-Corp separately? And the answer is, do you have to create each one? Yes. You have to create each one separately. But just so you know, it's possible if you do it right. If you are the only owner of the family business, the real estate business, the Shopify store, and the Amazon business, let's say, that S-Corporation owns all those LLCs as sole proprietorships, there are no other shareholders, nothing else, then you do not even have to file a tax return for any of those LLCs. You just put all of it onto one tax return. All of the deductions that you would have gotten in the LLC still apply. You still deduct them all, and your S-Corporation still has its deductions, but you only have to file one tax return for the entire business empire, the business structure, the main company and its wholly owned subsidiaries. So that means you save money on tax preparation, you save money and time and effort on all that by just consolidating all of those businesses into one tax return at the S-Corp level. Okay? All right. So let's see, other questions. Mohammed's asking, is it true? Oh, that question just went away. I didn't see it. Oh, the next question just went away. You guys must be answering those in the background for me.
Yeah, so yeah, we marked these as Q&A. Honestly, Reed, there is a lot of questions, so I can start going through and asking them to you. I think if you might be able to find it somehow. We're marking them as we get questions. So.
Okay, I see. Yeah, I can click a box, but then I have to look at all of the questions, and that would drive me nuts. So why don't you pick out the
Yeah.
ones that seem to be the most relevant, important, necessary, juicy, or weird, and I'll do my best.
Sounds good. Mohammed has a question here, the one you saw. If he sets up an LLC in a sales tax-free state like Delaware, does he still have to pay sales tax in, other states that he has nexus in? Is that kind of a separate issue?
Okay, so we did not discuss sales tax, and frankly, Nexus and the whole concept of sales tax and all that is a whole other seminar that we probably ought to do. Let me give you the short answer. If you set up in a state that does not require sales tax, then you'll try and have your nexus, or in other words, the place where your business lives and resides and has a business unit, you'll try and do that there. And then you would not have to pay sales tax for product that you sell to people who live in that state. So let's take Delaware as an example. If you set up your business in Delaware, then anybody in Delaware who buys your product or service, you do not need to collect sales tax and pay the sales tax because Delaware doesn't have sales tax. Whereas if you were to set up your business in Arizona, or worse, how about California? That's like the worst one. And New York is the second worst. They have huge sales taxes, and they're also huge states. So if you set up as a corporation or an LLC or anything in California, let's say, then anyone who buys your product and some of your services, depending on if they're subject to sales tax or not, anyone in that state who buys your stuff, you're obligated to pay sales tax on it, whether you collect the tax from the customer or not. Okay? You're obligated to file and pay. It's going to be monthly, quarterly, or annually, depending on the tax volume and so on and so forth. So what I'm getting at there is, if you're smart, you're going to try and set up your business so that it's domiciled in a state that either has no income tax, that has no income tax and has no sales tax, or has no income tax and has extremely low sales tax and an extremely small number of people in the state to start with, so that the number of sales that you have in that state is very low, and it becomes very easy to track and pay sales tax if you want. There are circumstances under which you would not pay sales tax. There are circumstances under which you would, but I can tell you this. It doesn't matter what business structure you select. It doesn't matter if you're inside the United States or out. I mean, if you're in Belize and you're selling on Amazon.com in the United States, or you're selling to American citizens and having product or something shipped to them, whatever state they're in, they are responsible to pay their own sales tax. Sales tax is due. The question is who pays it? Is it you as the merchant, or is it the customer who bought the product? You may not realize this, and I'm probably giving you a much longer answer than I should at this moment, but let's say that I live in the state of Utah, which I don't, but if I did, then I would, if I bought something online or from a catalog and had it shipped to me from out of state, I have an obligation at the end of the year on my personal tax return to the state of Utah to declare how much I bought and to pay the sales tax on it. I don't know if you realize that. This applies to pretty much every state where there is sales tax. If the merchant doesn't collect it from you, then you still owe it. You just have to pay it on your own, and almost nobody does. That's the problem. That's why states are screaming and complaining, is because if you set up an internet-based business and you're shipping product into a state, the state has to try and collect from the taxpayer, the individual. And nobody does that. Nobody, voluntarily goes and says, oh, all this stuff I bought this past year, I'm going to just voluntarily pay sales tax on it. So that's the problem. And there are ways to deal with that. There are ways around it, and there are certain structures that you can set up and ways that you can do it. And one of those is to set up an LLC or a corporation or a partnership or something like that in one of those states like I described, Wyoming being an excellent candidate. All right. Let's see. Other questions? Go ahead.
Yeah. So let's see what I got here. Um, Rodney has a good question here. Is it legal, and a few questions like this actually, Joshua and Rodney both have this question. Do you have to be in the state that you're, forming that structure in? Do you have to have residence there, doing business there? And then
Nope.
Rodney's question is it legal to create an S-Corp in a state where you have no connections or real estate?
Yes. That was a
Yes.
no and a yes. No, you do not have to be in the state. And yes, you can create it in any state you want. Doesn't matter where you are. You are creating a robot. Okay? It's almost, let's call it a drone, because drones are cool these days, right? And my son loves to fly his drone around. Got him one for Christmas. He loves it. It's a drone. The drone can be anywhere. It doesn't matter where you are. You're just controlling it. So if your drone's in Wyoming and you happen to be in California, that's great. If your drone is in Wyoming and you happen to be in Texas, that's great. Or Florida, that's great. You can set it up in Wyoming. You can control it from wherever you are. You can be in the UK and you can control your drone in Wyoming. Okay? So yes, you can set it up from anywhere and control it from anywhere. Where is the drone? That's the important part. Not where are you, it's where is the drone? Where is the business being conducted? It's being conducted at the business address in the state in which it was organized, which is the address of your registered agent. So through the process of setting up the LLC or the S corporation, you're going to set up a business address there. And that's where the business is conducted. That's where your quote-unquote nexus will be for that purpose. And that's where for all practical purposes, the business originates. Now, let's say that you've got a whole bunch of inventory and you bring it into the United States and you bring it into your garage in New Jersey. All right? Well, then the question becomes, do you have nexus in New Jersey? Because that business has some inventory in New Jersey. You might have a situation where you have to start paying sales tax in New Jersey if you store inventory there. Okay, if you don't store inventory there, if it's just in and out, and there's all kinds of other things to consider. But frankly, the goal is to conduct the business, have the business conduct itself in that state, and you are not creating a nexus anywhere. That's what you really want to try and do. Okay. And Conrad asked basically that same question. Can I just register my business in a tax-friendly state like Delaware, Wyoming, but conduct my business out of my home? No, you're going to conduct the business in the state that you register it in. Okay? You're going to be in your house, but you're not an employee, you're not a sales rep, you don't have inventory, you're not doing anything other than you get on your computer and remote control your drone, which happens to be in the state of Wyoming. And that's where the nexus is. Okay?
All right, great.
All right. Yeah, go ahead.
Got a few questions here about DUNS numbers. What's your opinion on DUNS numbers? Are these things that people should be worrying about, or should we just forget about DUNS numbers?
Well, so the answer is no, you do not need a DUNS number. No, you do not need a credit report number for your business. There are credit reporting agencies. There are all kinds of numbers that your business can go get and things like that. But really, depending on the kind of business you have, you probably can skip the DUNS number. All you need really is an EIN, and you're in business.
Great.
Yeah.
Got a couple questions here from Gina and Kelly. They have set up LLCs, S-Corp specifically, in some of these unfriendly states like California. What would be the best course of action to kind of move that LLC from California to Wyoming or something? Is that just a complete refile, or?
Well, it's not necessarily a refile, but you can always move the business by just simply filing in the new state. So you create the a corporation but the same name, or the LLC with the same name in the new state. And you terminate in the old state, send in a final tax return in the old state, and start doing business in the new state. And if that new state doesn't have tax returns, then there's nothing to file in terms of taxes there. The federal income tax won't change because federal doesn't care what state you're in, it's always the same, right? So it's really not hard, and our legal team can help you with that. We've done this before. We've had people come to us with this very problem. They've got a they've got a corporation in an unfriendly state, and they're paying huge franchise taxes and all kinds of fees and everything, and it's very expensive and very tax liability wise, it's huge, and they're just getting crushed from a business standpoint. And we've helped them move into Wyoming. Not a problem.
Great. Well, I will tell you, my friend, people are on the edge of their seats and everyone's listening because I see the same questions coming in. So I got Carl, Olga, and Randon have a similar question here. When tax season comes, do we need first of all, to actually get started and do these forms and everything, do we need a registered agent in the state that we're going for? So if we're trying to file in Wyoming, how do we find a registered agent for that?
Well, we do that for you as part of the setup for the business. The main question is, and it's all revolving around the same question, how and where should I set up my business structure? Not only what should the business structure be, but how and where should I set that up? And, the main answer is, well, this is why we have a consultation. This is why we probably ought to just talk with you. You can shoot an email to Ayanna@fbaprep.com. And she will set up a consultation with me or with Chris, our attorney on staff, or whatever it seems like you're in need of in terms of consultation. We can accommodate, and then we can start looking at your individual situation, the tax state that you live in, whether you already have a business structure or not, those kinds of things. But in terms of finding or setting up a registered agent, we already have a registered agent in Wyoming. And so that's easy, that's done. As we provide that as part of the setup service. And then somebody's asking also about not just a registered agent, but do you have to find a CPA in the state that the business is registered? And the answer is no. We have a team of CPAs that we use, and they can file in all 50 states that require business taxes to be filed. There are many states that don't. I should not say there are many. There are a few that don't require anything. But for those that do require filings, they're able to file in all of those states. It's no problem. If you use the FBA Prep bookkeeping service and the FBA Prep recommended CPAs, then it all flows very nicely, and it doesn't matter what state you live in. We can handle your business tax return. We can handle your personal tax return. We can handle the bookkeeping for your entity or entities, and kind of take that whole worry off your plate so you can sleep well at night. And that's really kind of the overall goal here, is you want to be able to sleep well at night because you know you have liability protection, you know you're not getting creamed with taxes, you know that you're set up with a structure that allows you an elegant and profitable exit in the future, and we can do all those things and set it up in a way that's not expensive to maintain and is really done in a way that fits your life and your business goals the very best. Okay.
Yeah.
All right. Other questions?
I want to say before you jump into the next question too, this is something you guys don't want to know everything that there is to know about this stuff. Again, lawyers, accountants, they're going to school for many years to learn these things. I've heard Reed's stories, and I know he's been through some headaches that he's not even talking about to learn how these things actually work and see them work in the real world. So you don't want to know everything there is to know about these things. This is something you should outsource. I'm always thinking about, when I think about outsourcing, I think about what would the customers absolutely care and want me to do, right? So does the customer care that we're doing the delivery driving? No. So outsource that, right? Have a different company deliver the boxes. Same thing with this. Your customers do not care who is filing your taxes. They don't care who is setting up your business structure. So I do think this is something your customers want you to focus on your business and outsource this part to someone who's had the headaches and been in the trenches and made the mistakes and knows how to get these things set up properly now. I can say with 100% confidence that Reed knows much more about this than I do, and I've spent a lot of time on this as well. So this is definitely something you want to outsource. And that actually brings us to a question here that Brandon had. The cost between these different structures, are they pretty similar? So if I want to do an LLC versus a corporation versus a partnership, is it roughly the same cost to do all of those?
Yeah, it really is roughly about the same cost, and if we do it for you, we do it in Wyoming, those costs are very minimal. Like I said before, it's around $664 all in, including your registered agent, including your registration fees that have to be paid to the state, including your setup, the actual bylaws or operating agreement that the attorney prepares for you, the articles of organization, the articles of incorporation, or whatever is necessary that the attorney prepares. It's all included. All that's in there, and only has to be done once, and then the maintenance on those runs around $200 a year. Now, if you try to set up in California, I think the franchise fee alone is $800 and some odd, like $850 a year just to maintain your registration in the state of California, to give you an example. So really, we are doing it in Wyoming because of cost as well as because of all the other great reasons, and so it's not, comparatively speaking, it's not all that expensive to do it right. More important is that you understand the difference between these entities and why you should do it right, and then we'll help you set up whatever needs to be set up so that your business can prosper and not get sidetracked or killed. When Will tells you that I've been through headaches, let me tell you, I've seen what happens when people don't set these up right, or I've seen what happens personally firsthand when you have situations that arise that threaten the business, and you're glad and lucky and happy that you did it right, because it can save you hundreds of thousands or even millions of dollars to set it up right at the beginning, right? And if you don't do that, then you're asking for trouble. So,
yeah. And I'll say too, just to your credit, I've sat down with Reed at a table to iron out documents like this before, and there's you speak from experience, and it's very obvious. There's a lot of things that Reed brought up during our conversation that I just hadn't thought about in any of my businesses. Like Reed's talking about, succession plans and estate planning. These are things that people really don't think about until they already have millions of dollars, and you just hope that you think about it when you have millions before someone comes for them and not after. So absolutely, even talking to a lot of lawyers and people who do this for a living, Reed is not a lawyer, but I think knows much more about these types of things than most lawyers I've talked to as well. So absolutely, guys. I mean, and I know Reed right now probably still has the time to do personal consultations with a lot of people.
Well, that's because we're in beta, right?
Yeah.
When we go out and fully launch FBA Prep out to the public, then personal consultations with me won't really be available anymore. It'd just be too busy. But we'll have a great team. Our legal staff and so forth will be available to talk about these things, and our accounting staff will be able to talk about the tax-related matters. But while we're still in beta, and while we're kind of small and growing, then yeah, I'm happy to take consultations. I have a certain number of them that I can do through the week, a certain number of slots, and I've told Ayanna here, fill these up, and when they're full, then we have to push to the next week, and so I apologize to you in advance if you're trying to get an appointment on my schedule and we're not able to do it for 2 or 3 weeks or whatever. If you call like right away, then hopefully you got a better chance of getting in there quickly. You know how that works, right? It's first come, first serve. When my calendar's full, it's full, and I can't really change that. So at the end of the day, I would love to personally help you, and for those of you that are wanting to get moving, take some action and get these things set up properly, get a hold of Ayanna as soon as you can, and let's get these things set up for you.
All right, great. And Olga here has a great question too. You talked about how, say, California, if you choose the wrong state to set this up in, you're paying $850 a year just to have the state recognize you. So Olga had a great question here. With the FBA Prep S-Corp and LLC formation services, is that $664 just one time, all in, not recurring, and then there's no maintenance cost on that?
For which kind of structure now?
I believe she's talking about an S-Corp.
Yeah, so like I said, it's at $664 to set it up, and it's about $200 a year to maintain it. And the maintenance is filing. There's some forms that have to be filed with the state every year. They need to be filled out, filed, and then a fee paid to the state. And so that and plus you have to pay your registered agent. Most registered agents charge, between $100 and $200 a year. And so our whole thing is about $200. Will get you not just the form filled out and filed, not just the fee paid to the state, but also the registered agent. All three of those things for a couple $100 is really cheap, and that's every year. It's once a year, but it's included in the 664 for the initial setup. So you don't have to pay that maintenance until year number 2.
Okay, and the maintenance sounds, you said it's about 200, 300, somewhere between there?
Yeah, it's usually around $200. Some states are a little more, but if we're going in Wyoming, and I sure hope all of you will consider Wyoming because of the maximum liability protection and because of the low cost, then it's only a couple $100. If you want to do it in Delaware, that's fine. We can help you there too. It's a little bit more expensive. If you want to do it in like Nevada, they require the business to have a business license, which is like $350 a year. Plus, you also have to have a registered agent down there. It's a couple $100 more, and then your filing fees. It's going to be $800 or $900 a year maintenance to go in Nevada. It's way more than that in California and New York and New Jersey and many other states on the East Coast are far more expensive. We can go over all those costs, but ideally, you want to keep your costs down, right? You want to maximize your profits. You want to be the one standing on that pile of money, so don't spend more than you have to.
Yeah, and keep in mind, Olga, that $200, $300, the vast majority of that goes to the state. So no matter where you're doing this, like Florida, I think it's $150, $200 a year to the state. So that's a state fee, and that I think is the only maintenance cost you'll need. So.
Right. And, if any of you missed any of this seminar, some people probably came in late. Maybe came on, partway through or whatever, and picked up in the middle. Hey, go back and watch it. Watch it again. We've covered a lot of ground, an amazing amount of ground in a short period of time. And I bet that the questions that many of you might have about, why should I do this or why should I do that, or what's an S-Corp, or how's an S-Corp different from a C-Corp? We covered that earlier, so maybe don't forget to go back and re-watch this seminar. You'll get a lot more out of it the second time around, I promise.
Yeah, absolutely. And this replay will be up within a few hours. We want to make sure to get this out to you guys immediately. And guys, if you have any further questions, I know I have a lot of questions above that have not been answered. So if you still have those questions, you can go ahead and copy and paste those into the box. We'll try to hit a few more questions here. Reed, I'm assuming you probably have to take off within 20, 30 minutes maximum. So.
Yep, I can stick around for a few more minutes here. That's no problem. But I do have some other things scheduled later this afternoon, so I would like to answer as many questions as I can in the time that I've got. So.
All right, great. Reed, do you want to just do like a lightning round? I'm not even going to mark the questions, and you can just see them as they're coming in.
Yeah, I can do that. Right. One question I have here is, do I have to have a physical address to the state I am moving my business? No, you do not. You can move the business into a state, and we can provide you with a physical address there. You don't need to have one, and it does not need to be your house. In fact, it probably shouldn't be your house. All right, let's see. If my existing corporation is primarily a corporate shell, oh, that question just went away. Somebody ticked that one off. So.
Yeah, Steve, we're going to stop marking things so they can just stay in the box here.
Yeah, sorry about that. Actually, here.
What was that question?
It's in Slack there for you. Sorry about that.
Oh, okay. Yeah, I'll go have a quick look. Just a second here. If my existing corporation is primarily a corporate shell, and the business is service-based, is it still possible to have the Wyoming corporation, or will I have to set up a separate product sales LLC? Well, if you have an LLC, you said my existing corporation, which is an LLC. Is it an LLC or is it a corporation? That matters. But is it a corporate shell? If it's a corporate shell, hopefully it's an S-Corp. It could be an LLC, but it's better if it's an S-Corp like I put in the diagram. And if it's service-based, then that's fine. You can go get a Wyoming corporation or a Wyoming product sales LLC if you want, or you can have that same corporate shell conduct business to do your product sales. I would not recommend that, though. I would recommend that you set up a separate LLC for your physical product sales. And the reason is because maybe someday you want to sell that physical product business while keeping your consulting, keeping your service-based business. If you were to sell the business that has the physical products in it, and you're looking for a buyer, okay, and the buyer comes along and says, I'm interested in your products, but they're not interested in your services, then you're going to have a hard time selling the business if it requires both, if the business is based on both. So that's why I recommend, of course, having a separate LLC for the physical products, a separate LLC for services, a separate LLC for real estate, separate one for the family business, separate one for each line of business that you really potentially might sell in the future, okay? All right, somebody's asking, do you need to set up bank accounts in the same state you set up your business structure? The answer to that is no. You can set up a bank account in any state that you want. Some credit unions have restrictions on geography, but banks don't. Can you transfer your LLC from Nevada to Wyoming, and how difficult is it to do? Yes, you can transfer it. I already described how to do that in a previous answer. Somebody else asked the same question. It's not that difficult to do. We've done it before. Just set up a consultation with us and we'll walk you through that, okay? If you start a seller central account under your own social security number, can you change it to an EIN later? The answer is no. Don't start a seller central account under your social security number. You cannot change it to an EIN later. Not without an act of freaking Congress, and even then it might not work. I'm aware of, and I've been selling on Amazon a long time, and we've had thousands of clients that we've helped through this, selling on Amazon. I'm aware of none that were successfully able to get Amazon to remove a social security number and put an EIN in on the same Seller Central account. It's actually against their terms of service. So I would not count on being able to do that. If I start an LLC in the US, do I need a corporation in Canada? Well, why would you want a corporation in Canada? Are you going to sell in Canada? Are you going to do business in Canada? If so, then you probably do want a Canadian subsidiary for your United States-based business. Okay? All right. Can you give some info on the bookkeeping through FBA Prep? We're going to do another webinar, I believe, about that. Are we not, Will?
Yep, and I can get the date for you right now. Yeah, we have an upcoming webinar on that. That webinar is going to be May 23rd, so next Tuesday at 5 p.m. Eastern. And Anna, we're going to be emailing everybody about that probably tomorrow and announcing it on Thursday as well. So you'll hear about that. And that's going to be a session just like this next Tuesday, 5 p.m. Eastern, just about bookkeeping and accounting for FBA and Amazon business owners. So be sure to be there for that. That's going to be a great one as well.
And I'm amazed. I'm just looking at the number of people in attendance here. We've had a lot of people on this seminar, and most of you are still here. That's crazy. I mean, most of the time on a webinar, by the time you get down to the Q&A, you know, most people are gone, and it's only the diehards that are asking questions. But Will, we still got the majority of people here, which means that there are still a lot of interest and a lot of questions about this stuff. So I'm going to keep hanging in there the best I can.
People are dying for this knowledge, yeah.
If we do multiple private label brands, should they each be in their own LLCs? Okay, so this probably is an Amazon-related question, and so I'll try and answer that. On Amazon, you do not need to put different brands into the same Seller Central account, although you can. But let's say for a minute that you do, I don't know, an exercise brand, a kitchen brand, and an automotive brand. Okay, well, why would you not build an LLC for each one and then have each LLC get a Seller Central account? An LLC can have one Seller Central account. You do not want to go get another Seller Central account, and you're not asking for a second Seller Central account. You're building a company, and that company will have one Seller Central account that's completely within the terms of service. And that Seller Central account will be focused around all the brands that you sell in the kitchen area, and then different one focused around all the brands that you sell in automotive and so forth. So that's usually a smart way to do it, because in the future, if you're going to sell that business, you might be selling it to somebody that wants to do business in kitchen or wants to do business in automotive or whatever department you're in. It's harder to find somebody that wants to be a generalist and wants to do business in every department. Or what if you have one brand that just absolutely takes off and dwarfs the others, and you decide you want to keep that brand, you want to sell the others? If they're all in the same Seller Central account, you can't really sell or get rid of the other ones very easily. You've got a commingling issue between brands. So those are things to think about. I think, again, a consultation would be in order. If you have multiple brands, we probably ought to know how many what kind of sales volume you're doing in those, and that'll all kind of feed into the decision as to whether or not you should open secondary LLCs for a single brand or for a group of brands in a single department, or if you should not worry about it at all. All right, will the Wyoming LLC have a bank account in Wyoming? How do I open one? The Wyoming LLC can have a bank account in Wyoming. We can help you open it, or you can go open it yourself at a local bank. Okay, it's not hard. It's the same way that you would open a checking account at your local bank. You just go in and you hand them the documents from the Wyoming LLC and open the bank account using those documents. Our attorney will give you everything you need, all the forms, all the documents that are necessary for you to open the bank account at your local bank. And at the bank that you like to use, you can have your personal, like checking and savings accounts, and you can have your business checking account there. All right. I was wondering, for the maintenance, do we pay any type of additional fees for the yearly accounting? Yes, yearly accounting or bookkeeping is something that you need to do. You can hire a bookkeeper, you can hire a CPA, you can hire FBA Prep to manage it for you, you can do it yourself. There's all kinds of ways that you can do that, but bookkeeping is important. I mean, you need to know what your income is, you need to know what your expenses are, you need to know how those things are handled, you need to know what your profitability is, and without good numbers, it's hard to make good business decisions. You know, I've made a lot of business decisions, you know, where my gut tells me one thing and then I go dive into the numbers and come up with a completely different answer because the numbers don't lie. They tell me, you know. I had a product one time, I'll just tell you, we were selling lights out. We sold 2,000 or 3,000 units over 5 weeks on Amazon, and we were like, holy cow, this thing's going to be awesome. And then I went and I did the numbers and I realized we were only making about 40 cents per unit, and we were going to sell, you know, 1,000 units and make $400. And when I say make $400, that's before our costs. So we were literally going to lose money. So we killed that product, even though it was a fantastic product, because we simply couldn't make enough on it. So those kinds of decisions, you know, are important, and they're generally driven by numbers better than driven by your gut. Can an LLC own other LLCs? Generally, the answer to that question is yes. LLCs can own other LLCs. The map that I showed you earlier with the way that this is set up, where you've got you at the bottom, you're kind of like the roots. The S-Corp is kind of like the trunk of a tree, and then each of the businesses is kind of like the branches, is a great way to do it. But each of those branches can own other branches too. But I would definitely have all that flow through into an S-Corp if I could. If not, then into a C-Corp or into another entity like that that will, you know, minimize taxation for me at the personal level. Somebody's saying you'd point out some significant differences for foreign sellers. Yes, thank you for reminding me. The significant differences are these, and I've mentioned these along the way, but I'll point them out again. Foreign owners cannot have an S-Corp. Okay, you have to do a C-Corp in that case, which is fine. We can use a C-Corp much the same way as an S-Corp, and it can do the same kinds of things. You just have to be aware that at the end of the day, if you have a taxable income, you have to pay federal income tax on it. But it's really great for foreign owners to have a C corporation inside the United States, especially if, like, let's say you're in the UK and you have a UK limited company, and you can have a C corporation in the United States that is a subsidiary of your UK company. When you do that, then that opens up some great things, because your C corporation is managed by your UK company. And so whatever profits you have in your C corporation can be paid to your UK company as management fees, consulting fees, things like that, and you end up getting very low or no profit in the C corporation while filing all the correct stuff to keep legal and stay good inside the United States. And then that money, by, you know, through that mechanism, gets moved into your UK company, where you take it as income there, and then you get to write off more expenses against that. So that's one great example of a significant difference for foreign sellers. Another significant difference is a lot of foreign sellers believe that they can do business inside the United States without having to file tax returns or pay taxes, and that is absolutely false. In fact, I can show you, and I do show you in the previous webinar, exactly where on the IRS's own website it specifically references foreign owners of companies and foreign sellers, and shows you that yes, you absolutely do need to file income tax returns, whether it's personal return or a business return. And so where this really matters for foreign sellers is that foreign sellers are much better off trying to file a business tax return in the United States than trying to get an ITIN. It's an International Taxpayer ID number, and file a personal tax return in the U.S. because personal tax rates are higher, and because you have all of this red tape and other things to get the ITIN, and there's maintenance on it in the first place, and then it's just a real pain. It's much easier to do the corporation, usually an S-Corp, or usually a C-Corp for foreign owners. And then that also enables that C-Corp to import into the United States. It has its own tax ID number, it can buy real estate, it can do all kinds of things that are harder for an individual who doesn't have a social security number to do. So there's all kinds of benefits there. I would recommend, for those of you who live outside the United States, that you go and watch the other seminar that we did and pick up the nuances there. You'll see that there are some differences, and I've just named 2 of them. Okay, if you have a corporation in Canada and an EIN number for that corporation, will it still be beneficial to set up an LLC and an S-Corp in the United States? Well, if you have a corporation in Canada and an EIN number for that corporation, what that means is you're filing a corporate tax return 1120 inside the United States for the United States-based business that company is doing, and then you're filing a tax return in Canada for the Canadian-based business that company is doing. So it is probably beneficial to set up a C corporation in the United States to handle the U.S. business as a subsidiary, and that way in the future you can sell that business off, whereas right now it's a single business operating in 2 countries. You would have to sell your Canadian business if you wanted to sell your U.S. business. And so there's some advantages to that. You do not probably want an LLC. You cannot do an S-Corp unless you have a social security number and you're a U.S. citizen, or those kinds of answers, are things that we ought to probably talk about. All right, running out of time here. I'll hit as many of these as I can. I have a C-Corp in California, so clearly I need help. What do I need to do? Contact Ayana at fbaprep.com. That's AYANA at fbaprep.com. Set up a consultation, and we will talk you through what you need to do to get that corporation up and running in a different state and close out your California presence. So do we have to shut down our seller's account and create a new one with an EIN? Do you have to? No. You could continue running your Seller Central account the way that it is right now, but run all of the bookkeeping through an S-Corp. So what I would recommend that you do, if you have a Seller Central account and it's in your Social Security number, I'd recommend that you set up either a C-Corp or an S-Corp, and then do all your accounting for that. In other words, kind of like move that into the C-Corp or the S-Corp by changing the bank account and changing the debit card on the Seller Central account. And it's still going to be under your Social Security number, but that's okay. Amazon's not really going to care, and from IRS's standpoint, the business is being done under the S-Corp or the LLC, so that way you get the liability protection and you get the tax treatment, the favorable tax treatment that you want. So you don't have to shut down your seller's account, but you're going to have a hard time selling it, so you may want to transition into a new one over time so that in the future, if you decide to sell that business, that you can. That'd be the only concern about keeping your Social Security number on a Seller Central account. I certainly wouldn't want to sell that Seller Central account. I don't know that you even could sell it with your Social Security number attached to it. Somebody says, I am illegal in the USA. Do I have any options? Okay. Do you have options? Yes. I mean, file a C corporation and have the C corporation run whatever business you're doing inside the United States, but without a Social Security number, you're going to have a hard time getting income. So those are, you're going to have to figure out how you're going to handle the tax issues being a non-resident alien that's undocumented, as they say. That's probably something that you should speak with legal counsel about to make sure that you don't trigger some sort of weird issue there, okay? If I sell on Amazon under my name, not with my Social Security number, I don't have a social security number. I'm not from the U.S. Can I use an EIN as soon as I've registered my LLC? Yes, you can. If for those of you who are foreigners, and this is another difference between the foreign situation versus domestic, most of you who are foreigners, when you went through the tax interview on Amazon, you did not give a social security number because you don't have one. Instead, you represented to Amazon that you're going to take care of your own taxes and file your own returns, and you relieve Amazon of the duty to report. So they only report if you sell more than $20,000. They report that to the IRS, and so really at the end of the day, you're in a situation where you can go back through that tax interview and add the EIN and add the bank account and the information, the debit card and such, the address of your corporation or your LLC that you just set up, and you're off and running. So that part you can do. Somebody says, I know there's no need to live in a state, but is there any benefit to having an address in Wyoming? Well, there can be benefits. For example, if you have a company that has an address in Wyoming, then you can call that the domicile or the home state, and you have a lot smaller footprint there. From a sales tax standpoint, that has some advantages potentially. Also, from the standpoint of not having a nexus somewhere else, that's possibly some advantages there too. What do I do if I already created a Seller Central account over a year ago? Well, I think we've addressed that. You can continue operating that, but I would get a business structure in place as soon as possible and move the business part of that over into that business structure as soon as possible. Even if you can't take your Social Security number off of that account, you may want to open a business and then create a Seller Central account there and then slowly transition over to that Seller Central account and eventually wind down your personal. I'm getting a lot of that type of question. Is it a good idea to put yourself as an employee of your S or C Corp so you can earn a salary? Yes, that is a good idea. It's something to talk with your tax professional about. Particularly if you start earning a lot of money, then IRS probably will want to see some employees. And you want to be the first one in line if you're an employee. Also, you can get health insurance and other things through the company and write it off. Whereas a sole proprietorship, you have a harder time writing those types of things off. Premiums and things become deductible under a corporation. Okay, next question. Every time you have a new product or brand idea, should you open a new LLC under your S-Corp umbrella? No. Every time you have a new product or brand idea, no. I would only open a new one if I had a brand that's doing very well, or that I want to expand, or I have multiple brands in the same department, or if I have some products that I'm really I'm confident are going to do very well. So no, every time you have a new product or brand, no, you don't necessarily need to open a new LLC for every one, but only for the big ones, the major ones, the ones that you're likely to stick with long term and likely to want to sell someday. Somebody's wanting to double check. You can file a personal tax return in one state and a business tax in a different state across the country with no residence. Taxes blow my mind. Okay, so you file personal tax in the state that you live in. If you file your business in Wyoming, there is no business tax in the state of Wyoming. There is no tax return in Wyoming. There's no state taxes. So again, you file a federal tax return for the business. You file a federal tax return personally. And I showed you those forms. And then you file whatever state you're in. If that state has income tax, then you file a state income tax return along with your federal income tax return for you personally. But if you set up the business in a state that does not have income tax, then you will not be filing a state income tax return for that business at all. All right, man, I'm getting a lot of thank yous, a lot of
yes.
People asking questions about.
Yeah, we're almost to your time limit as well. I didn't want to speak during the lightning round because you're giving so much value here, but.
Well, is there anything I didn't cover? Anything I missed?
I got one question here that I would like to see you answer as well. And this is something that, you may not know off the top of your head. Rodney's talking with Amazon right now, said he could change his EIN without losing account history. I haven't heard of that either, but possibly Rodney has, fallen through a crack or something. He's just saying, should he be wary of that answer, or if Amazon's telling him he can change his EIN, should he just go ahead and do it?
Yeah, you cannot change your EIN. You might be able to change your Social Security number into an EIN, but changing an EIN amounts to selling the business, and that's against Amazon's terms of service. And look, I don't know what your experience is with Amazon, but if I call Amazon and ask a simple question and I get an answer, and I call back 5 minutes later and I ask the same question to a different rep, I get a different answer. And really what happens is, if you trust the answer that you get one time and you have not explained it perfectly and fully, or even if you did and the rep doesn't understand it perfectly and fully, you might end up taking action on bad advice from an Amazon rep. Please read the terms of service. Go through and look at what they allow and what they don't allow. And it's very straightforward. They do not allow you to own more than one Seller Central account. They do not allow a business to own more than one Seller Central account. They do not allow the Seller Central account to be transferred from one person to another or from one business to another. Okay? What they put in writing in their terms of service will be more reliable than what an account rep says. Now, having said all of that, Amazon does change. Over time, things change. And it's possible that they are changing or will change or have changed that or some portion of that. And there may be special circumstances under which they would allow you to make that change if you petition. But remember, petitioning involves kicking the sleeping dog, and you may not want that, particularly if it's $1 million account. You don't want to jeopardize it. So just think about those things. And if you want to talk about those, again, reach out to Ayana at fbaprep.com, set up a meeting with me or with the legal team. We can talk about bookkeeping, we can talk about structures and entities, we can talk about taxation, we can talk about Amazon, those kinds of things. But at the end of the day, your specific situation may be different than other people's, and what you did to set up your Seller Central account may be different than other people's, so your answer may be different than other people's.
Yeah, and I'll say, guys, move quick on that, because we just heard from Ayana, and her, I guess, Reed's calendar is already filling up. There's over 10 meetings already scheduled, so be sure, if you are interested, to email Ayana and get that set up quick, because it is first come, first serve, and Reed's already got more than 10 calls lined up now. So
wow, just in the last 30 minutes, yeah, boy, if that's indicative of how much interest there is in this stuff, then we are going to be pretty busy. So yeah, again, thanks, Will. I would encourage everyone to write down that email address, get a hold of Ayana as soon as you can, and I will do my very best to work you into my schedule as quickly as I can, okay?
All right, perfect. Reed, I got one last question for you, and then we will wrap this baby up almost right on time. Olga and Mohammed both had the same question here. Is there some type of income level that you would look at to, say, all right, now I'm going to set up the S-Corp? Of course, most people in here, just starting their first business. In that situation, do you try to validate the business, get some income first, or if it's something like Amazon where you have to put that EIN in, are you just going for the S-Corp right off the bat?
Well, if you have any amount of money that is transacted, that's expenses. For example, anything that you spend to create or start in business, if you buy business cards, if you order a sample, I mean, those kinds of things, that's the start of a business, and you have an expenditure right there. So that is eligible for a tax return. You probably don't need to file a tax return if all you did was order a sample and you never did anything. But look, the people that are on this webinar, the people that are really interested in setting up corporate structures and are going to go out there and do it right, they're the people that are going to be successful in the first place. And so I would recommend that if you really intend to be successful in your business, not a hobby, a business, at least, let's say, $1,000 a month in sales, then you really, really should consider setting this up right from the beginning, because that 1,000 is going to turn into 2 and into 4 and into 8 and into 16 and 32, and before you know it, you're hiring people, you're having to come up with a lot of other types of registrations and numbers and things that all tie back to your EIN and your company. And if you don't have that, people don't, banks don't think you're serious. You have a harder time importing. You have a harder time getting bonded and things like that. You have a harder time getting, for example, if you're buying something within the United States and you don't want to pay sales tax on it yourself, then you need to have the right kind of registration so that you can do that. And if it's just you personally, then you're not going to have that necessarily. A lot of companies inside the United States won't sell, especially wholesale, to an individual. They'll only sell to a company with an EIN. And so, I mean, there's lots and lots of reasons why you want to set these things up. I've only touched on a few, but there are literally hundreds of reasons why you want to set something up if you intend to be in business and make a profit. And that starts as little as, a few $100 or $1,000 a month.
All right, great. Well, we have already taken you past your time limit, so I appreciate you staying late and everything. Guys, I know there's a lot of questions in here that we didn't get to answer. Obviously, this subject is a sprawling one, right? This really is the type of thing where the best thing to do is just jump on the phone with someone that knows what they're talking about, talk through it for a few minutes, and get that advice and move forward on it. So, again, Ayanna@fbaprep.com is the place to email. That is Reed's assistant, the person who's going to be going through and scheduling all these calls. I know there's over 10 calls already set up from this webinar, so I see there's a lot of interest in it. It is first come, first serve, guys, so make sure to email that email if you do want to take advantage of that, or if you just want to get on the phone with Reed. Obviously, don't abuse his time or anything, but that is the place to be. And Reed, I guess any parting words for people going out there and setting these things up? I know, there's a lot of people that might even be overwhelmed right now. My big advice is to, don't try to master everything here. This is the type of thing that you want to outsource. This is easy outsource material to me. But is there any parting words you want to give everyone before you go?
Yeah, thanks, Will. Appreciate everybody's time. I've enjoyed immensely the chance to sit down and kind of have this chat with everybody. Parting words really would be, look, do it right from the beginning. Set it up correctly. You'll sleep better at night. You'll have the best tax treatment. You'll know that you've done it in a way that's going to be durable. Okay, that's far better. And you don't have to know everything. You don't even have to do this yourself. We can help you, or you can find competent professional help wherever you need it. That's why they're there. But at the end of the day, don't be doing business as a sole proprietorship if you can avoid it. Don't be doing business as a disregarded entity unless it's part of your long-term plan. Okay? Set up your businesses so that they can be sold, they can be transferred, so that they're protected. Treat them, maybe not quite as well as your children, but close. You're going to feed them, clothe them, give them what they need so that they can grow up and survive. And man, sometimes I'd love to sell my kids, but I definitely want to sell my businesses. You're not going to retire if you're constantly working in your business, constantly. I mean, eventually, you want to grow the business up and be able to sell it. Maybe some people are sitting there saying, "No, I want to run this Shopify store till the day I die." But the minute somebody waves $1 million in front of their face, they're like, "I'm out." And they'll wish they'd set it up correctly. So don't wish, just do it. That's my advice.
Great advice, and I think that's the perfect way to end it. So thanks again, Reed, for being here. And guys, you will get to hear from Reed again. Reed did not even talk about the amazing stuff he's doing on Amazon as well. Reed is someone who's been involved in many different businesses, now in the online business space, doing the Amazon business, and doing some really interesting things there, launching multiple products and brands simultaneously. So we really talked about business structure today. We're also going to have Reed back for the next 2 Tuesdays. So you guys are going to be able to get to know Reed very well. Next Tuesday at 5 p.m. Eastern, May 23rd, 5 p.m. Eastern, we're going to do bookkeeping and accounting for FBA and Amazon business owners. Be sure to make that one, because bookkeeping and accounting is another financial area of your business or legal area of your business that just causes a lot of confusion and friction and can really hold you back if you don't have if you don't know what you need to do. So be sure to make that one. And then we have another one on May 30th at 3 p.m. Eastern, specifically about creating and optimizing your Amazon product listings. So we're going to get the full dose of Reed's knowledge here over the next few weeks, and we are excited to have you back next week. So once again, thanks, Reed, for being here, and thanks for staying a little late for everybody and answering some extra questions. We look forward to seeing you next week, as long as you're not too bogged down with these calls.
Okay, love it. We're looking forward to it. Thanks, Will, for everything.
All right, great. Well, guys, this replay will be up tonight. We'll have this up within a few hours for you. This is going both in the e-commerce Empire members area as well as on YouTube for people not in e-commerce Empire. So we will be sending out a replay of this in just a few hours, tomorrow morning at the latest. So be sure to go over this again. And once again, you know, if you do decide that you want Reed's help with this, Reed's personal help on your business structure, be sure to email Ayana at fbaprep.com. Just let her know that you are on this webinar and want to have a consult with Reed. And that is first come, first serve, but from what we've seen, it is almost full already. So be sure to email Ayana when you want to move forward with Reed. And with that, guys, I think we'll call it a wrap. So thanks again for being here, everybody. Sorry we weren't able to get to all of the questions, but again, this is a sprawling concept. Best thing to do is going to be to have that personal consult with Reed while he still has the time to do them. So we will call that a wrap, guys. Any further questions, you can throw them in with this video in the community, things like that. And awesome stuff. Thanks for being here, guys. It was a great time for me, and I'm sure you guys got just as much value out of it as I did. Be sure to take action on this stuff soon, too, while it's fresh. You know, don't wait for this all to become hazy again, and then, you know, don't set it up correctly and run into those consequences. So get out there, take action on it, and set this stuff up right, because, again, this is something you got to set up once, and you sleep better every single night after. So once again, thanks to Reed, thanks to Steve, and thank you all for being here. We'll have this replay out to you in just a couple hours, and we will see you on next Tuesday at 5 p.m. Eastern for the bookkeeping and accounting call with Reed Larson once again. So thanks a lot, guys. We're going to leave the email address up here for a few minutes and wrap it up here. See you next Tuesday, and have a great week until then.